Hello, Maverick traders. Welcome out to your market roundup for November 18th. Corey here with you. We're always going to take a deep dive into the markets. We're going to try to highlight where money's rotating within and without certain sectors heating up or cooling off. And then we're going to highlight our very best ideas. And interestingly enough, this is a nice two-sided market where we've got some bulls, we've got some bears, we've got some opportunity in various directions.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, so as we dig into markets, I think for today at least, it was a commodity-driven day. Oil up 3 1/3, gold up 1.7. You can see Dow, S&P, Nasdaq, they were all kind of not too much to talk about. So markets are a little bit consolidating some recent gains. We've pulled back to some prior breakout points. But here's the key point, I think, is seasonality. Usually when you've had a strong year-to-date performance, the odds of us having another push and another rally throughout December increase. So it gets a little tricky. You could probably see a little false kind of shakeout to the downside, something like that, but then it gets gobbled up and gets really pushed higher. Another 5-ish% or something stock market rally through next month is very much in play. So advanced decline line, about 60% of stocks rallying, and the 50 period moving average is perfectly flat. I mean, 51% below, 49% above. That doesn't really speak to a runaway bull market, but it's great for trading in that we have bulls, we have bears, we have some sectors and some areas of the market moving in completely opposite direction, and that allows you to have good trading candidates on both sides. So here's what I was talking about. Here's your prior resistance acting as new support, right? The old ceiling, the new floor. This was the breakout zone. And I wouldn't be surprised, again, I almost kind of expect a little squish in here, a little false move lower, and then an acceleration back up. If you look at the NASDAQ, we're kind of squishing below, but I could see the NASDAQ maybe pulling back to the 50 and then another advance. So I'm not so sure it just goes immediately, but ultimately I would expect higher prices are still more likely than not. For today, we had Tesla up big. That's been an ongoing theme since the election results. Nvidia is going to report earnings this week, and that's one that everybody's going to be watching closely. Other than Nvidia, the semiconductors actually traded very well. Nvidia was by far the laggard there. Energy was relatively strong, relatively in the green. Healthcare has had a rough time post-election. Today was more of that as well. Now, as we look at the expectations, again, I don't think you want to overthink this too much. You'd have to say, hey, the markets are strong, the markets are healthy. Let's go with the flow and let's try to be a little bit more centered towards that direction. Makes sense to me. So we've got some bulls, we've got some bears, because this is what's really nice about the market is, again, it's giving you momentum and velocity in both directions. First, let's look at a couple of these bulls. One is Berkshire Hathaway just starting to perk up here. You can see the gap. Left this gap open. Great price action there, and we're starting to break higher. I don't think moving up towards about $500 per share in BRK.B, the B shares, is out of the question into year end. I would frankly anticipate a move up towards that level is coming. EQT, another one with bullish momentum. Nice burst, a little flag type pattern, and then another burst starting to occur here. So we've got some bulls. Now what about on the bearish side? Akamai, this is in the tech space, and tech really isn't doing too much. It's been held up by some of the Tesla, Nvidia. Some of those are holding up the NASDAQ a little bit better, but a lot of these tech names, Akamai, big breakdown on volume, continues to push to the downside, and I think going into the 70s seems fairly likely. And another is ConAgra. This one broken down, continues to trend lower, anticipate more downside. So, little consolidations, little patterns, little pullbacks. I would look for bearish entries in those types of names with that type of velocity to the downside. So SPX is back to the old breakout zone, old resistance, new support type of idea. I'd almost expect a little fake out like I talked about, and then that year-end rally. We get PMI data on Friday, services and manufacturing. Services have been stellar for a long time. Manufacturing PMI has been really weak for a long time. That's expected to continue. On the earnings front, we've got Lowe's, Nvidia. I mean, certainly that's the one to watch most closely. We've got Palo Alto, Target, Snowflake, Walmart. So still some companies reporting that can move markets, especially now where Nvidia has become the largest market cap and biggest weighting in the S&P. A lot of eyes are going to be watching that for how they report and whether they can keep up this stellar growth. My guess is that the numbers are going to blow the doors off. I mean, they're going to continue to report stellar numbers. However, a lot of that seems to be priced into the stock. So we'll see how whether the stock can perform even with some really, really stellar fundamentals. Thanks everyone for joining us. Have a great week ahead, and we will see you next time. Goodbye, everyone.